All right, what is going on, guys? Welcome back to another video. Today I'm going to be doing a trade recap for the trade that I took overnight on gold. So let's just get straight into it. So let's start here. This trade was pretty much during Asia session, around kind of like the beginning of Asia into like 8:30ish. So basically, what I see with gold, first things first, right? Going on the higher time frame, we can see here gold ended up coming into this huge void. So let me get rid of these volume profiles, and then I'll kind of walk through how I use those in order to actually take trades. But first off, with gold, what I wanted to see was the higher time frame here. We could see that we were trading inside of this NWOG here. We also were at this point inside of a like 4 hour bearish gap BPR, if you want to account for this 4 hour inverse. So at this point we're in an area where I'm likely to want lower price versus wanting higher price. Reasoning for this here, you can see gold came up, took out these range highs here, and then saw a strong round off. So I'm essentially looking at this as a retrace to then move lower for these low resistance draws on liquidity on our lower time frame. This high up here is high resistance at this point in price. At this point here, it would we'd have to make a 70-point move on gold, about a 1.5% move to take these highs versus coming from up here and coming down maybe 0.7% or so to take the lows. So that's kind of what I saw on the higher time frame. On top of that, I went ahead and took a fib. So this fib here is from the range high here to the range low, and you can see here at this point we're reacting off of the 618 level, which is your OT level, and basically a pretty premium area in price where you'd be looking to take shorts. So now we can scale down into the 15-minute where I actually framed the trade. So with gold, the way I trade gold is I'm typically using the 5-minute time frame or higher to take entries. The lower time frames on gold don't typically look all that clean. You guys can kind of see it's not going to print how NASDAQ prints. The 1 minute is it's just really like a noisy chart. So I typically go up to like the 5-minute or the 15 for more clarity. And as I play price out, I'm going to explain the levels that I have marked out. So first things first, what I noticed here, before the Asia session, which is 8 p.m. So I noticed a lot of people consider like the 6 p.m. open into like 7:45, like Asia session. And it's not truly Asia. Asia actually starts at 8. That's like the true kill zone start, and then goes until midnight. So what I noticed here off of, the market open 6 p.m., we, traded higher here, took out this high from the, previous session, and ended up sweeping this high and starting to round off here with an SMT with silver. So I do use silver as a correlated pair. That is a correlated pair for gold when you're looking for SMTs. However, you do have to be pretty discretional with SMT because gold and silver are not perfectly correlated. You'll make a lot of like lower time frame SMTs that are not truly valid in price. So you do have to use some discretion along with it. But I did see this SMT. I saw that we took out this high, and we're now in a premium area where shorts can make sense. So I noticed that we leave behind these two 15-minute gaps, and I basically just combine these gaps into one. And the idea here is I'm wanting to see strong displacement and ideally a close through these 15-minute gaps, right? If we are going to move higher in price, ideally we're going to keep stair stepping, making higher lows like here, here, and down here, and continuing higher and making the higher highs. So at this point now, if we come down, end up closing the 15, disrespecting this now higher low, it's more likely that gold's going to trade closer to these relative equal lows that you have marked here, and these equal lows marked down here, as well as possibly further down into these areas. So I took a standard deviation first off on this leg up here, and I took it off of the lower time frame. So on the 5-minute, it'd be very hard to take the standard deviation, but off of the 6 p.m. open, there was like a clear manipulation up. So I'm pretty much taking the standard deviation of that move. So we come here. So I'm pretty much taking, this high to like this, low right before the market closed at 5, taking that standard deviation leg and using it. And so basically you can see that's kind of where I TP'd. I TP'd at -125. But there was also another level aligned there, which I'm going to explain here, that goes along with volume profile. So let's go ahead and play out this candle and play out towards entry, right? So boom, right? Here we get a strong displacement candle, right? We're now in the Asia session. At this point, it's 8:15. So we're in the Asia session. We're now seeing some volume. What I notice here, we come up and we're rejecting this area, right? We can see on the 15-minute, these wicks clearly rejecting to move higher. And, we're seeing more strong volume to the downside. So, using kind of loose order flow, this essentially just looks like buyers are getting absorbed, price is not moving up as they're buying the market, and sellers are actually on the winning end, where you can see price is actually moving to the downside stronger than it is to the upside. So, all these little wicks up are getting sold off. You see this little pump up here gets immediately sold off. And so the trade idea here ends up being valid. So we now break this low right here. We form this, 15-minute order block, which I don't really account for in price, but ideally you don't want to really see price trade back above this order block. And we now inverse this higher 15-minute gap and this volume imbalance. So I actually took my entry here. So we'll go ahead and sell one. So I actually took my entry here, and I had my stop pretty much at the high of the displacement candle. Now, typically you'd wait for the inverse to actually happen, but at this point here, right, we have the SMT in price. We swept out this, draw of this range high, right? And we're seeing clear, rounding off. It clearly looks like price is wanting to get into a potential sell model. So at this point, this is a strong displacement candle, really good entry, for continuation. And at this point here, we have clear areas to break even and just overall have kind of low resistance lows, right? A lot of kind of internal draws here to target into these relative equal lows and, pretty much perfect equal lows down here. Now, let's cover the other, let's cover the other standard deviation that I took here. So I took this leg up here. I'm basically using this as like kind of a retrace leg. The other thing I also used as well was this 5-minute wick. So you can notice here there's a small 5-minute gap. We have this wick that, technically wicks into it, and we close out of that gap, which validates the gap and validates this as a rejection wick. Now, I didn't take entry off of this rejection wick, but I just wanted to view it and kind of see, if price is going to react. Aligned with that, I also had taken a standard deviation of this range, and you can see here -1, which is typically your like retracement area. -1 aligned with CE of this wick perfectly, but I typically don't like top and bottom tick. What I usually like to do is see the rejection wicks play out and then take continuation off of that. But that was just some extra confirmation there using deviations and the rejection wick in alignment. And then at this point here, I'm sure that if you were to take a fib retrace, fibs are also good to use. Here you can see 0.79 inside that rejection wick, and we hold 0.79 perfectly. But yeah, I typically don't trade rejection wicks, so I'll usually just watch them and see if we react off of them, right? We have this new rejection wick now coming off of, the previous one here. We hold that and we push lower. But basically using confirmation being that, 5-minute, 15-minute flip here, we get this 5-minute CISD technically, and then the 15-minute, strong close. So now I'm using these, this opening standard deviation leg, and I'm also using this, new standard deviation leg here and kind of seeing where levels align. So this is now where volume profiles come into play. So I end up turning on the New York volume profile. So now we're going to start explaining how volume profiles work and how I use them. So this is probably going to be different from other people that you have watched. I use volume profiles in a pretty simplified way, mostly using value area high, point of control, and value area low as levels. I'll use volume nodes here and there, low volume nodes, high volume nodes, just to kind of see reactions in price. But typically I'm really just using value areas as targets or potential areas to look for reactions. So this here is the New York volume profile from that previous day. So this is not overnight. So this is New York's price action, right? So now we're running off of this volume profile and essentially seeing where we could either react from, where we could target, etc. So at this point, aligning the volume profile to just my price action analysis, right? Just analyzing price for what it is. Aligning volume profile, we can see, boom, we come up, sweep these highs. We also sweep out value area high from previous day. So with value area high, what you typically look for if you're wanting to see continuation higher is a push up through value area high and then a potential retest down into like bullish areas, right? So align this with your fair value gaps, change in state delivery, fibs, whatever. And then you'd want to see, continuation in price. Now this here is kind of like a, fake out in price, because we don't really have, true bullish structure that aligns to that, and also don't have, clear bullish areas to target, right? This draw on liquidity becomes, a protected area potentially, because we're coming off of the higher time frame fibs. We don't have, higher time frame draws to target above. We're in a bearish area. So at that point, using discretion, I'm not expecting for value area high to hold, and I'm wanting to see confirmation that it's not going to. So off of this entry, you can see here, we end up coming back down below that New York session value area high, right? And the New York session value area, the way I have it marked here, is from 8:30 a.m., which is the start of the New York kill zone essentially, to the New York close, which I have at 4 p.m., which is when the options market closes. So at this point here, we have, entry trigger, right? We have confirmation that price wants to move lower. We're seeing rejections up here, sweep, SMT, right? Retrace up here into rejection wick, and a clear continuation off of that. And then at this point, we are, basically looking to flip the 15-minute gap and just taking entry off of a strong continuation candle. So now at this point, we'll play the trade out. And the reasoning that I took TP here is basically that, this is basically where the value area low for New York session was. So a lot of times since I've, been using the volume profiles, I'll notice that when you have value area low, a decent ways above, actual draws and liquidity, a lot of times you'll come down, tap into that value area low, and then maybe retrace up or start to consolidate. So I really like this as a target. I also like this as a target because both fibs lined up in that area. You can see here the fib from the opening, kind of like the opening range at 6 p.m. had -125 aligning pretty nicely at that value area low. And then the new fib that I took off of the, Asia open retrace here aligned with -2 at that value area low as well. So at this point here, I decided to TP right in this area. This looked like a perfect area to TP. So basically, we'll go ahead and play this out. Again, this is a 15-minute entry, so I'm basically only watching 15-minute structure for this, as, that's what I'm basing this trade off of. So we'll go ahead and play out price. So we come up and we tap into kind of this order block at this point. So if price is truly going to be bearish, I'd want to see us hold that order block. You can see, that's exactly what we do. So obviously you can now align this with like fibs, right? We come in, we tap 0.618 fib here perfectly aligned with the order block. Another way to use order blocks as well is ideally you want to see price respect around 50% of that order block. You usually don't want to see price push much higher than 50%. So here you can see we take your fib, we hit 50% of the order block perfectly to the tick. So you have your high to low fib aligned, and then you have equilibrium of the order block also getting tapped. And then we get this strong continuation down. So after seeing this here, I had more conviction in the trade at this point, right? We're holding, making lower highs, and now making lower lows, right? This low right here that I mentioned before, want to see it get broken, confirms that this now is going to, end up failing to be a higher low. And that means we're going to fail to then make a higher high. So at this point, rounding off, getting wicky at the top, seeing strong displacement to the downside, holding retraces. So now a little bit more sauce. When we have these wicks like this here, where we have these strong kind of rejection wicks, and we see price break them, right, break through them, you can kind of use them now as a rejection wick to the other end. So, this here is now an order block, right? This is now, another order block in price. Again, we want to keep seeing this, stair step down and hold these, bearish areas, right? If you want to, call it that. So play price out again here. Boom. So we come up into this area, looks like a pretty strong candle, right? But ultimately, we end up holding this, potential rejection wick, as well as this newly created 15-minute gap. So we perfectly tapped that 15-minute gap, right? This candle here, let me move this a little bit to the side. This candle here, we had a devil's mark. We came up, right, made a wick on that candle by sweeping out that devil's mark, right? Tapping into 50% of this wick. We held 50% of that wick perfectly, tapped into this newly opened 15-minute, saw strong displacement down. At this point now, I'm going break even, right? We're in that, area for, where price could be using this now as a retrace to go higher. So this is a make sense area to break even. We also take out, this obvious internal low as well. And then, like I said, tap into -1, -1.25 area, just an area where if price, does want to continue higher, we would see price hold this and, invalidate the trade idea. So at this point here, makes sense to be break even. And again, like I said, just holding down for basically that New York session value area low. So again, target, aligns with standard deviations, right? We have obvious bear structure here, obvious sell model at the top, and obvious target being this value area low aligned with the fibs. So keep playing this out in price. Boom. And when I'm seeing these kind of rejection wicks, what I'm wanting to see is we continue to disrespect and, push price below these wicks. I don't want to see us hold these wicks and hold any higher. I want to see us keep rejecting. So now my next idea here is see a close below this wick and now use this as another area of rejection. Other thing that I also marked out was this 15-minute, right? Wanting to see a closure below that, which you can see we get, right? So now at this point, there should be nothing, for price to use in order to push higher. The sell model is pretty much, happening at this point from the top, pushing down for, all these levels. So play this out, right? So we now break this wick right here, and then you can see we wick TP perfectly. So overnight, it was weird. Like this candle just basically spawned. We were trading like around here, and then TP filled, and then this wick spawned like 2 seconds after. So it was a really weird wick, but we, tapped this level perfectly, and then playing price out a little more, kind of hovered in that area, right? So I mentioned, okay, we take out value area low. Typically, it's either we're going to use it as an area to start bouncing from, right, to start reversing, or, we're going to consolidate there for a bit, build more structure, or we get to run out that value area low and then look to target levels below that. So if I'm not mistaken, gold made a pretty strong move to the downside overnight and ultimately ended up running out those draws on liquidity lower that I had marked, being the relative equal lows and these equal lows here, and then ultimately this, draw there. Then at that point, we come into, areas where we could see some potential support. So probably start to slow down a bit in price, as you could see. But yeah, this trade ends up playing out very well. I forgot to put my TP bracket down here, but you guys get the idea. But yeah, TP'd there at 822.2 across my accounts. I'll go here onto my calendar. So during the AM session yesterday, I had taken a loss. I took two losses, and I took a break even during London on gold. So I was down about 700 across all my accounts after AM session yesterday. Went ahead and called it a day. Typically, if you take 2 losses in a row, you are, just offsides with the market, or the market is just not, delivering. So it's better to just preserve capital and look to reset, the next session. And then I came into overnight. I took a loss for 445 on my top steps, and then on my trade evates, my lucids, I had taken it was like a 380 loss because I'm not copy trading them using a trade copier. So on trade evade here, you can see 380 loss here. And then I took the re-entry on gold. You can see held this trade for an hour, 50 minutes for about 1640 P&L. So that put me up around 1173 on the day. And then the lucids are up 1270. Like I said, they got slightly different fills, so the P&Ls are a little bit different in that way. But basically, yeah, same exact trade across those. And yeah, I mean, this is it's pretty textbook sell model. Everything that I wanted to see throughout the trade continue to happen. My ideas were not being invalidated. They were all playing out, the way they were supposed to. And TP was, ultimately, perfect. Realistically, we started to reject here. So another like 45 minutes of price right here that I really was not going to be willing to hold for. And then also, I mean, catching a 17-point move on gold is pretty solid. Gold typically doesn't, make these super huge moves. So 17 points is very nice, 1.6 R. So very solid trade there. And then coming into AM today, I was pretty much just super risk off. On top of that, I didn't really see anything in price that I truly liked. You guys can see I have ES pulled up on the side. So throughout like AM, it was kind of just a little bit indecisive, right? Shorts weren't a guarantee. Longs were not 100% looking good. There was a lot of discorrelation in this area. And then later into the session, like 10:30ish, we start getting some decent setups to start targeting these draws here lower. But yeah, really didn't see much of anything, and also planned to be risk off today anyway. As you can see, my accounts are locked out, so I locked them out last night for the whole session today. This is just a really good trade to take, so no reason to give profits back to the market. But yeah, this should be a pretty big breakdown video. It's about 20 minutes, so this is a pretty solid video. Also covers a little bit how I use the volume profiles. Realistically, you can use these volume profiles in a pretty simple manner. You can also, obviously make it a little more complicated, but realistically, I would try to keep it as simple as you can. And not overcomplicate things. As you guys have seen in previous videos, my trading style overall is super simplified, so there's never a reason to overcomplicate whatsoever. Now I do want to go back, kind of go around to where my TP was. So I'm gonna break down just one last thing here for the volume profiles. So let me turn off the New York session profile. All right, so now I have the volume profile for the overall sessions, which is, I have it from 6 p.m. to, let me see, I think it's 5. Check my setting. 6 p.m. to 4. So I have it at 6 p.m. to 4 p.m. So basically it gives the entire 6 p.m. open into the options close at 4 p.m. the market close. So if you used those levels as well, you can see here, I mean, overall we were trending down towards the New York session value area low, but at this point as well, we're trending into the overall previous day session point of control here, which aligns with those relative equal lows, as well as this overall fib here, and then also coming into that value area low for the overall 6 p.m. session into the close, which aligns with these equal lows and around that -2.5, -2.25 area. So I very well could have held this trade longer. However, definitely didn't want to swing anything overnight. And with Trade-Evade, you can't leave positions open because it'll obviously leave a limit. So if my TP gets filled, right, let's say I left orders for my TP to get filled either down here or here, it's going to leave this break-even order here. So price comes up, fills that, it's going to fill me into buy positions, and then I can end up waking up to blown accounts off of that. So with Trade-Evade, you have to kind of trade that way. With Top Step X, obviously, if I wanted to, I could have held this further, but this is just a good trade to take, and really no reason to be greedy. Had a lot of levels for me that lined up here, and then price did start seeing a little bit of rejection around here, right? So it's very possible, right? Price could have easily stalled here, retraced up, very well taken me out break even or whatever the case, or invalidated this whole move, and then at that point it would have been greedy to hold further. So was really satisfied with this idea, played out perfectly. And I definitely wanted to get a video on this because I feel like this was just a very textbook trade that allows me to break down kind of everything that I've been utilizing with my trading, my overall model, how I've been incorporating volume profiles as well. But yeah, I'll make more videos on volume profiles. This is kind of just more of a little intro basis kind of video to show kind of how I use them. But I'll break more videos down in the future, kind of explaining how to use your volume nodes and things of that nature. And then also hopefully start breaking down a little bit about the basics of order flow and price. But I mean, yeah, this is pretty much kind of my textbook model here. Really just playing a high time frame continuation, right? Using this move here as a retrace, playing continuation off of the 15-minute lower. So yeah, super solid, right? Low resistance, equal lows. Can't get any cleaner than that. And that put me up around 12K. I think it was 12.2K or something like that over the night. So I definitely was, satisfied just being risk off today. And I'll look to catch, another opportunity either tonight or into tomorrow. But yeah, this is a pretty long video, but definitely covered a lot of key concepts in here that I use in my trading. So ideally it can help you guys, and hopefully you guys, take some value from this. But yeah, that's pretty much the recap for the day. Hopefully you guys enjoy this. If you do, be sure to leave a like, comment, and subscribe. I'm going to try to, keep getting videos like this out. Markets just haven't really been giving a lot of opportunities to cover. So, I really haven't been making many videos, just trying to keep quality over quantity. But I think this is a pretty solid one to make, so definitely going to be putting this one out. But as always, I will see you guys in the next video. Take it easy.